All right. What is up, everybody? This is Chris here, aka No Risk No Premium. Hey guys, real quick, I just wanted to come in and post some levels to you guys for SPY in the market and what to expect for the coming week, or what to expect tomorrow, the coming week, and the coming weeks. As obviously we have the Fed information continuing to unfold of what they're going to do from a quantitative tightening. If they're going to tighten, if they're going to load off the balance sheet, or reduce the balance sheet, what they're going to raise rates to, how many basis points, etc. So all of that's looming in the background. Then, of course, we've got all the fuckery going on with Russia, Ukraine, and the U.S. wanting to get involved. Now, I'm nobody to make any comments on what is happening because I'm not a leader or anything like that. But I'll tell you this, obviously, we're going to be felt in our day jobs as far as trading. So it's something that we need to talk about and address. Okay. So the markets, guys, is very simple. You need to size the fuck down on all your positions, size down on everything, and you need to see profit and take profit. That is it. This is a smash and grab environment to the fullest. Okay. If your normal position size is 1,000, then cut it in half. If it's 500, cut it in half. If it's 100, cut it in half. I don't care if you have a $10,000 position or a $100,000 position. We are one headline away from being limit down or limit up. Okay, we are one overnight session from completely blowing your short or long position out of the water. Okay, and that's not what we want. Okay, we don't want anyone to get burnt that way. I've sized the hell down on my trading. I'm taking profit and seeing profit. Perfect example is we alerted the SPX puts for Tuesday's expire, at the end of the session on Friday. We got them at 15. They went to 19. I sold. Okay, because I didn't know what the hell was going to happen. Now, obviously, looking back on it, those were the 4,300 puts, and you can see where ES is now, which is the S&P 500 futures. We were well below that, so that would have been a great trade. Okay, but listen, it didn't turn out. I still made my profit, and I got out. I didn't hold over the weekend because I didn't know what the hell was going to happen. Okay, but there are some things I do want to point out on SPY. And some major levels that I think are extremely relevant that we need to look after. First off being one, this gap to fill up, right, which happens to be the huge support at 432 that we bounced off of yesterday and ran like 6 points up from there. And then we continued to sell off. After hours, obviously, we had the gap down on the Russian news and and Putin's address to his nation, pretty much saying, try to stop me. Anybody, I'm going in. So we have, this is the first level. We're going to go to the upside first. This is the first level of resistance I want to see is this gap fill up. So I got 432. Now, remember, guys, we always talk about, let's zoom the fuck out. Okay, we'll go to the 4 hour first. Let's zoom out. Okay. What do we see here where we bounced off of originally? This huge neckline of this massive head and shoulders that we've all been talking about, right? This is the 4 hour chart. Okay. So we see this huge, I mean, there's so much demand in here as well of where we would bounce. So it makes sense all the way over here that we bounced, right? We zoom out even more. Very easy to see, right? This neckline, I mean, like bounced off it to a T, right? Especially where this huge bounce area was on the last time we visited down here, which you can see that there's obviously a lot of demand in here. So that would make sense that we bounced, right? Now, as far as the upside is concerned, if we're just looking at the daily chart here, right, I would think we would need to probably try and get back. If bulls are going to have a case at all, we need to fill that gap up to 432 first off. Okay, then Friday's high, 438. Okay, after 438, I like this area in here where the 8 EMA, this yellow, but we have the 50 MA. 444. So I'd be looking between 442 and 444. So what do we have so far? We've got 432 to fill the gap up. Okay. 432. Friday's high, 438. Okay. Then I like pretty much 440, 441, 442, 443, 444, anywhere in there. Okay. And obviously we know there's a ton of fuckery in there, guys. So what is it been? It's been pop and fade, pop and fade, pop and fade, right? So what will we expect to probably happen? Now we're getting all these MAs all bunched up in here again, just like we had over here. Remember what would happen over here? We had all these MAs and EMAs all bunched up, okay, and all this fuckery happened, okay? So, excuse me. So what do we think is going to happen? I think we're going to try to get back, okay? We're going to try to get back up to this area. Okay. Now I don't know if we're going to get there, but we might try. They might try to bull trap everybody and get us up there. All right. Now let's look to the downside real quick. Okay. I want to zoom this out. As we can see, 426, 427, definitely to the downside. That's pretty much where we're at right now as we've opened here down lower. As you guys can see, we're already down here at 426, right? Does that hold into the morning? I have no idea. Let's see. But we can see this is a huge level here for us to bounce, right? It would make sense we would bounce. And if we do not bounce, I'd be looking at this last ditch effort right here at 420 for a bounce, which equivalates to about 4,200 on ES for my SPX traders, okay? I would definitely look in there. If this breaks, I mean, the next major support I really see is really far down there. I mean, we've got 414, and then we've got pretty much 404, okay? Which, if we zoom out even further to the weekly chart, we can see what? We have just lost, pretty much lost the 50-day on the weekly, right? Which we have reclaimed and went and tested on the daily chart, which was up here. What's the, what? The 200-day moving average, but we failed that again. We've now got this 21 EMA, 8 and 21 EMA, which is the yellow and red crossover. Okay, we had the fail of the 20. Now, are we going to hold this chart? We're going to hold and reclaim back to this 50-day, which happens to be where? About 437, 438. Maybe. I don't know. I don't know. Okay. But what we do know is on the weekly chart, the 200-day moving average is way down there. Okay, way, way, way down there. All right, but one thing I do want to know is the, hold on, let's just do max. Let's do the monthly. This is something that was brought to my attention. Now, this monthly chart is very interesting because what do we have here? Holy shit, for the first time since COVID, we've got a MACD crossover here. Well, you know what? It hasn't actually crossed over yet, but it's damn close. All right, it is damn close. So we do have the KDJ turning way down. We are finally off of the overbought area. We have failed the 8 EMA on the monthly chart. This is the monthly chart, okay? Where is the next, all of this fuckery where I still have these levels drawn, okay? Of where we could go to is the 21 MA and the 20, I'm sorry, the 21 EMA and the 20 MA. The green is the 20 MA. The dashed, anything dashed is a simple moving average. Anything solid is just going to be an exponential moving average, but it's right here in this what? 440. 440, right? Wasn't that a big level that we had just said? All right. So what do we have to the upside? I'll go ahead and repeat, okay? Oh, that's not what I wanted to do. Oh, shit. Sorry. Okay, so we had what? We had fill the gap, 432 to the upside. Then we've got Friday's high, 438. Then we've got, I would say, 442, 444. Okay, so we got 432, 438, 442, 444. Okay, to the upside. We've got to clear those levels to make a big bull case. But what do we have to the downside, right? To the downside, we had this 426 mark, which is pretty much where the bottom of all these long candle wicks are. So if 426 gets lost to the downside, which we're pretty much there right now, 420 is next up, okay, which would be about 4,200. Underneath that, you'd be looking at, hold on, I just want to get this in picture for y'all. Yeah, so after 420, I'd probably be looking at about 415, 414. So to the downside, we got 426, 420, 414. And if we get real froggy, then we're going to go where? What did I just say? that monthly chart. Oh, damn it. Sorry, guys. I got to save that. Month. I'm going to actually favorite this. Cool. So now I got it. Remember that monthly chart? So we had what to the downside, right? 426, 420, 414. Then we had 404. Okay, to the downside. So way, way, way down there. So guys, what am I expecting for this week? More headlines to just bomb our market. I mean, in my honest opinion, I'm thinking we're going to see a lot more headlines come out. Okay, I don't know what's actually going on over there because you have two different sides saying two different things. Okay, so all you can do is this. Do you want to be right or do you want to make money? You can be right saying, I knew this, I called that, but if you don't make money, I don't give a fuck. Okay, so you can make money by knowing your levels, understanding we're in a pop and fade market, and that anything that gets popped higher, if you see weakness in the market surrounding it, it's very likely they'll fade it. Okay. And I'll say this, guys, do not go balls deep on a short right here. Do not go balls deep on a short here. We have fallen 80 or 60 points, which is 600 SPX points down. And you're going to go short here. Okay, no, I'm looking for a pretty big bounce at either 426, okay, or I'm looking basically 4,200, which is 420. I'm thinking we're going to get a bounce. And I'm thinking they're going to try to trap some bulls. And it's going to be a big bounce, is my guess. Okay, so I would actually be looking on the call side there if we get all the way down there. Because here's why. Why else? We're at this 426 level, right? This is the neckline, guys. Remember that big ass fucking head and shoulders we're all talking about? Boom, boom, boom. Okay. You got to remember the Fed is still meeting in March and is still actually buying bonds. They're still purchasing assets from us. They haven't raised any rates yet. They haven't unloaded their balance sheet. And that all comes in March. So I think monthly OPEX in March gets fucking frisky as hell. It gets nutty. Okay. I also was talking to a few people that I guess you can call it was mentored by or luckily enough to be around coming up trading. Very smart. And they have made some mentions that the last times they've seen SPX or put premiums as a hedge this high were during times where shit happened. Go back and look at 2018, 15, 2008, 2001. Okay, these guys have been around forever and they have noticed that when people are getting this aggressive on the hedge sides, they usually don't miss, meaning something fucking happens. Alrighty, so my guess is this: something is going to happen. Does it happen right now? I don't know, but we can also, if we want to just do a quick drawing like this, we could just be like, we see this nice trend line, right? Do we come back and test that trend line again? I don't know. Okay, we could also see that there's a much steeper trend line just right here, right? Do we come back up and test 440? I don't know. Probably not tomorrow, but maybe. I'm telling you guys, there's going to be a bounce and it's going to be fucking epic, but we're at the neckline again. Okay, we're at that neckline of the head and shoulders. Okay, and you can see we touched that neckline a few times, right? Over here, we touched it a few times, touched it twice, 3 times, 4 times over here. So it doesn't have to break this time, okay? But we'll be on our fucking toes, got our head on a swivel, and if shit starts getting fucking froggy, then we're going to play the downside. But do not become obsessed with shorting the hole and we get bounced on. That's my main focus for this week, okay? Be quick, be nimble, but do not be in a hurry, okay? Trade what's in front of you, not what you want to happen, and do not FOMO anything. Okay, we're one headline away from you blowing your account if you're going to do something stupid. All right. But other than that, guys, that's all I got. I will put out a little bit more detailed watch list as far as like what strikes I'm going to be watching for Tuesday's expire tomorrow. Remember, it's 0 dates tomorrow and 0 dates on Wednesday because we had Monday off today. So we're going to have 2 days in a row of 0 dates. So shit can get fucking real froggy. And we can have some big gains, which I'm excited about, but we can also get reversed on. So I'll also be adding in a mix of maybe some Friday expires and maybe even some March 18th expires. I told you guys I did like the 4,500s on SPX of the March 18th in case we do want to get a massive bounce. It's not out of the question. Okay, it's not out of the question. It's not out of the question to go up and maybe test this 450 area. Okay, anything is possible. Anything is possible. You can be right or you can make money, and I choose to make money every single time. All right. Other than that, guys, hope you had a great President's Day weekend. If you're subscribed to our newsletter, check it out. Just dropped, and we will see you guys bright and early in the chat tomorrow or in the Discord tomorrow. Have a great rest of your day. Peace.